Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear Trade Day webinar for Tuesday the 13th of September. Good morning, good afternoon, good evening. This is Steve Miley on the call. Welcome, everyone. Going to go for a usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at some articles, some headlines from the major news wires even. What's impacting markets from a macroeconomic fundamental perspective right here, right now. And we'll take a look at the charts. So biggest day we've had for a little while in here, certainly since probably, I guess Jackson Hole, with respect to potential for market movement, given that we have the very much anticipated US CPI release in now just under 1 hour, 59 minutes, probably 58 minutes now. We're looking at on the core 0.3, month on month 6.1 on the year on year, 8.1 on the year on year for the headline number, and minus 0.1 on the month on month lower, dropping from previous levels for the headline number from 8.5 through 8.1, and it's actually a slight rise in the core. Is the anticipation, with the month on month on the core looking unchanged, and for a drop obviously from the previous flat that we saw in the month on month. So this is going to be really important, guys. Markets have been building towards this. Have we seen peak inflation? Is the worst of the inflationary pressures over, at least for now? And a lot of predictions for energy prices to be falling going forward. We'll take a look at that shortly. So, and oil prices are obviously have been tracking lower, rebounding more recently this week as we've gone more into risk on mode. But generally speaking, as we've been discussing, fading or not, not significantly fading, but easing, should I say, probably easing, not fading, but easing inflationary fears and concerns, which then should mean, a step back from the very hawkish tone that we've seen from not only the US, but from global central banks. This morning, though, we did have some very strong data out of the UK. So the unemployment rate actually dipped back lower in the UK to its lowest level. I think I've got a headline in here when we go through the headlines. There it is. There actually, UK employment lowest level since 1974. Unbelievably, but jobs boom is fading. Down at the unemployment rate down at 3.6%, dropped from 3.8%. But you can see the employment change actually missed expectations. So I was looking for 128,000 jobs added, ended up being 40,000. So a miss on the expectations there, and a worse claimant count than expected as well. So all of these in here, adding up to an average hourly earnings ticking up as well, and probably unsurprising given that we've got the inflationary pressures. So this report in here shows a still relatively healthy but kind of easing labour market in the UK. So that's kind of interesting. What else do we have in here? We had German CPI this morning, came in bang in line with expectations. So European CPI there, reflected by the German number, in line with expectations. And as we say now, all eyes on. So we did have the German ZEW. That's an important survey, a economic sentiment survey in here, missing expectations as well. Quite notably, actually, in some instances in here for the German ZEW. So certainly a negative there, and also for the Eurozone as a whole, missing expectations. So that's certainly a negative on the European side. However, all focus, as I say, on CPI. And the webinar, just as a point of housekeeping, guys, I'm going to wind this up. I ran on through 1 o'clock, I think, yesterday. I'm going to wind it up. Hadn't been on Friday, though, but I'm going to wind this up a little bit earlier today. I'm not going to go into massive detail on the levels because I think, there's a good chance we're going to blow through a lot of levels today. But I will show you the trigger levels that I'm looking at. A good day again yesterday. We were going into yesterday bullish. It wasn't an aggressive bullish day. We did say that, though, ahead of the CPI. And given that we had a really good day Friday, it was unlikely to be a massive day yesterday, but we did still eke out decent gains in here. Fourth straight winning day on Wall Street, ahead of today's CPI report. Let's take a look at Bloomberg's 5 things you start your day. So obviously inflation day, looking at that. Pricing 90% chance of a 75 basis point hike. We've been looking at that anyway. There we are, 86%. That was at 90% yesterday. So 86% chance according to the CME tool. Peloton, the executive chairman co-founder stepping down. Yeah, not really impacting what we're looking at. The FOMC meeting survey asked about the best trades ahead of the FOMC meeting in a week and a half's time. Is now a good time to add growth or value stocks to sell equities. So this is just a view in here. So you can basically click through and it's just asking for the views in here. A survey. So not really interesting us. Equities, obviously, advanced European stocks were higher this morning, despite the negative ZEW data, but did have the positive UK data. Equity futures tracking higher as well, and the CPI reading is clearly the key focus in just under an hour. So just running through the headlines: futures rise, dollar continues its drop. We've been talking about this. I spoke about this. Put this in my weekly at the beginning of the week, right? I posted at the weekend. A cross asset class shift, okay? And we spoke about the dollar turning. We spoke about the commodity markets turning. What hadn't turned was the treasuries. I'll come to that shortly. But yeah, dollar extending its move lower in here yesterday and again into this morning in here, and oil extending its rebound. Okay, so in that risk on mode. Okay, and the dollar slide. So the dollar down, does help commodities higher. So that's helping things in here. And then also we had this kind of negative news, which would have been positive for oil. Negative for the oil price. So it's positive for the oil price. Blinken says revival of Tehran. So that's the Iranian nuclear deal, unlikely for now. So that would obviously given potential increase of supply if they could do a deal, and then that would have seen that would have seen us lower in the oil price, but in everything that's adding to upside pressures on the oil price. What else do I have in here for you? A couple of kind of bigger picture things in here. I've been talking about this, the last BOA survey and this one as well. Investors continue to be very negative, fleeing equities en masse on fear of recession. Record 52% of respondents underweight stocks. Cash levels jumping again in here. Okay, so this is massive. I think this is a real contrary indicator. I think this was out the last time we were out. We were down near the lows. Let me go and take a look at the chart. Right, I think the last time we were on this, we'll go and take a look at the. Come on. Why is this so? Oh, there we go. I'll go look at the daily chart. So this would have been out a month ago on the S&P. So a month ago we were in here somewhere, right? Okay, and the month before that we were down here at the lows. I think it's a real contrary indicator. I think that there's the market is still underweight stocks. The market is still overweight cash in here. Yeah, the bigger market, that is, that's not the fast money, and that's not the day traders. That's the longer term money, the real money accounts, the pension funds, etc. Okay, the fund managers in here, they're underweight, and the market's significantly up from the lows here and pushing back higher. I'm not saying we're going back to the highs, but the market's underweight. There's a lot of money, there's a lot of cash to be put back to work, and this Bank of America survey tells you that. Okay, fleeing equities en masse. Yeah, higher 52% respondents, so they are underweight equities. 62% are overweight cash. Okay, so yeah, I think that's really significant in here, and I think it's a contrary indicator. Look at where we are here at levels not seen in here since 2008. That's the financial crisis. Okay, so the market in here is very much in recession odds still rising. The fund manager survey, right? So they're looking for a recession in here. I think it's a crowded trade, underweight. And JP Morgan, the actual investment team, the research team, saying the opposite. Soft landing is more likely than recession. Okay. Hawkish central bank rhetoric is not as important as data. Easing in inflation should be positive for cyclical assets. So they're saying getting back into cyclical assets, getting back into growth, right? Soft landing, more likely scenario from the JP Morgan research team. So that combined with that Bank of America team says to me, stocks higher into the end of the year. That's my view, bigger picture view. Futures are rising overnight ahead of the inflation report. We've already covered that. Fed set for another 75 basis point hike. Early pivot unlikely, a pivot away from the more hawkish tone. That's from a Reuters poll, just telling us what we know already, right? The market's already telling us that here, 75 basis point. We already know that, nothing new. So what else we have? Dollar weakness. Dollar heads for longest losing streak in a year ahead of US inflation report. Okay, on course a fifth straight day, but it's early in the day, right? So we've had 4 straight days down for the dollar, potentially for a fifth day lower in here. European gas prices have dropped. We spoke about this yesterday with the Ukrainian advances that we saw in the northeast in here, and a lot of positive, a lot of talk about the Russian military collapsing. But I mean that's probably speculative. That's probably hoped as much as actual proper real reasoning. But nevertheless, is putting downward pressure on European gas prices, which have been exceptionally high. And also we've got downward pressures on electricity prices in Europe. Again, positive for the global economy. We've recovered that. UK unemployment, lowest since 1974. What else do we have? Morning big, great expectations. So this is just focusing, obviously, on the fact that dollar continues to go down. And we're looking for the inflation report. So this is Reuters equivalent to 5 things to start your day. So great expectations, just looking for the expectation that inflation has peaked. Dollar eases ahead of key US inflation data, covered that already. Oil price climbs on concern over tight supply. And where are we? Well, European bourses are up higher. Remember, we're up over 1.5% yesterday across the board. We're up another 2/3 to 3/4%. In some places only 4/10, but nevertheless up between 4 and 8/10 in here this morning in Europe. And US futures in here having a decent day yesterday. S&P was up over 1%. We're up another 0.5 to 3/4% in here this morning. So a decent follow through. When we look there, let's just have a quick run through on the slides in here. On the charts. So as I said in here, really decent day yesterday. Probably a little bit better than I expected. We're up again in here this morning. Going into the day, you could only be bullish. What can you be? If I switch to the 30-minute chart, I've got a real slow reaction in here. We're making new highs now, right? We had this 78.6% retracement target. We're getting closer up to that already in here today. This could easily be back. This is the Jackson Hole high, right? Which is up around 42.30, 42.40. We could be there today post. But I think the main thing to look at is either these swing lows, depending on what kind of trader you are, you look picking at these swing lows. But you do have the trend line that comes up, the trend line wherever you want to draw it in here. There's various trend lines in here that we could draw. So you've got various triggers on the downside. Today's all going to be about going with the data. Yeah. If we only get a slight dip, I would say, given the underlying price action is bullish, if we only get a slight dip on the data, whether the data is, inflationary or non-inflationary, then if we only get a slight dip, I'd be buying the dip. If it starts taking that support, you go with it. Yeah. So I think you have to kind of wait. You're not just knee jerking into this. I would knee jerk on the upside. I think the upside, the market, the bigger picture, the bigger market is underway. If this number comes in and rolls significantly down from the expectations, if we're significantly below these expectations here, okay, if we're below those, okay, the 0.3, the 6.1, the 8.1, and the minus 0.1, if we're significantly below those, it could push real money to work. So we could see all that sideline money that's highlighted here from the Bank of America survey that could come back into work, today and then into the next few days. So I think that's what we're really, the upside potential is still significant in here. I wouldn't immediately sell on a break lower unless it was an aggressive break lower down through, it's after going to be down through here like 41.30 kind of area. If we get down through there, then, I'll be happy to be going short. But at the moment, I think, if it dips, if it only dips, it could easy dip and bounce. So I'm certainly approaching this from the long side, and nothing really more to add. Looking at the Nasdaq, it's the same story, right? And if we step into the 30-minute on the Nasdaq, we're up through the 61.8, 78.6 is up here above 13,000. That's the next target, and it could be all the way up here, back up to like 13,250, 13,300. That's the pre Jackson Hole high, swing high. Okay. I'm not going to go into loads of detail in here, guys. I don't think it's a matter of following the data today. I'm going to do a quick nod to the. This is very slow reacting. I'm not sure if I've got an internet issue here myself. Hopefully, this is all coming across okay to you guys. I'm really struggling to even change tabs in here, getting a reaction. Oh, okay. If I have to abort this at some point, guys, my apologies. It's Just want to make this bigger for you, but it's slow to respond. Oh, there we go. Okay. So this is gold on the 30-minute chart in here. We did get a new swing high. We've dipped and rebounded this morning. I think this is a really solid, bigger picture base building here on gold. And with that US dollar weakness, only approaching this from the bullish side now, having been kind of still hanging on to a more negative outlook. I think, for me now it's more bullish. And if we go and take, if it will allow me, here's the US dollar breaking below yesterday's lows. And we highlighted this low. I'm hoping I'm going to be able to see this low in here. It's all very slow in here. 107.26 and a half. This swing low in here from the 25th of August, and the current low. Oh, sorry guys. Where are I? 107.45. So through 26 and a half would be a really negative signal for the dollar index. Again, probably not going to get that ahead of the inflation report, but if it breaks there through the inflation report, that's going to help stocks even higher. It's going to help gold higher. Let's take a look at oil. So oil took out some significant resistance yesterday and popping higher again in here this morning, back above yesterday's high. Took out some good resistance in here. Took out this peak in here yesterday. Okay, these peaks around just around either side of $88. That secures this higher highs and high lows, secures a better base in here. We have dipped, we have rebounded this morning above yesterday's high. This high over here now is going to be my target. Where is it going to let me see? It'll be in the daily reports, guys, if you want to look at those. But it's around $90. For whatever reason, I've got a real slow reaction in here. But it's around $90. Yeah, it's going to be natural target to the upside now for oil, and maybe as high as 90. Tools above $92 in here. Okay, on oil. So staying aware of these levels and staying long here on oil. So I'm going to thanks, Steve. Early thumbs up before the chat closes. Okay, yeah, no worries. So I'm going to wrap it up there, guys. I've got a real slow response in here now. Hopefully you've been able to follow all of this. I think it's streaming. It says to me that it's streaming all fine, but I'm getting a little bit of a lag in here and reaction from my screens. I'm going to do a reboot when I come off. So I'm going to wish you all a great trading day. Stay safe out there. Helmets and goggles ready for CPI. Could be a very volatile day in here today, guys. I'm in a risk on mode in here. I think stocks go higher, oil goes higher, gold goes higher, dollar goes lower. Those are my views. If I can, let me see if it will let me go to the treasuries, but I don't think it is. Oh yeah, it's let me go to the treasuries. This is going to be key as well. Remember we pointed out these peaks. Now I'm probably not going to be able to look at these peaks. Oh, I can. It's going to let me look at the peaks in here. So treasuries rebounding in here this morning. If we can get above that high there, 116.23, and more importantly in here, where is it, that peak there? I think it's like 116.27 and a half, if it'll allow me to look there. But above those peaks, that peak there and that peak there. Oh, it's done it again. Such a slow reaction. Yeah, but I mean, that's going to be really important, because if we get a turn in the treasury markets in here, so yeah, 116.23, and I think it's 116.27 and a half. Above there, we'll see a significant turn in the treasuries as well, and that would then allow the dollar to get crushed, and then should give you potential upside in here. On 27 and a half. It was 23 and 27 and a half. 116, 23, 27 and a half. Above there on treasuries would be a really bullish signal for treasuries. Okay. Sorry, that's the 10-year note. Right, I'm going to wrap it up there, guys. Have a good one. Stay safe out there. Helmets and goggles. And, keep those stops tight. Be agile. Don't get tied to positions. And, we'll see how we do tomorrow. Cheers.